Hello, very good morning to all. The US Federal Reserve cuts rates as expected for the third time this year, but despite a lowered interest rate cut projected for 2026, US stock market rallied and the US dollar continues to remain on the softer side of the story. And very interestingly, yesterday, US stock market has been led by the laggards, which is the Dow Jones Industrial Average and the Russell 2000. And the small cap Russell 2000, interestingly, surged to a fresh all-time high yesterday. And despite this potential outperformance of the Russell 2000 and the Dow Jones Industrial Average yesterday, coupled with positive closes on the Nasdaq 100 and the S&P 500, we're now seeing mixed bag performance in the Asia Pacific stock market due to an interesting news flow stating that leading Chinese DeepSeek AI model is allegedly using illegal NVIDIA Blackwell chips. More on that later. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Thursday, the 11th of December 2025. So as usual, before we jump straight into today's full suite of Daily Dose of Market Insights, which I will cover all the intraday technical outlook on all the broad-based cross asset classes that we cover on a frequent basis, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So first up on the daily dose, as usual, we will kickstart with a brief walkthrough what has taken shape yesterday in terms of news flow and relevant data releases. So yesterday, key event was the FOMC meeting. So before I jump straight into the FOMC meeting, let me take you through the intraday price performance on the FX market and the major US stock indices. All right, so let's start with the FX market over here. All right, so let me go to my screen. All right. Okay, so let's start with the FX market first. So if you could look at, this is the 5-day rolling performance of the US dollar against other major currency as of 11th of December. That means, i.e., if all these lines are sloping downwards, it means that the dollar has weakened. All right. And also bear in mind that even before the start of the FOMC meeting, I do give a heads up stating that from a technical analysis perspective, the US dollar index is not showing any clear sign of a medium term to major bullish reversal technical condition. So after the risk event has taken shape, the dollar actually plummeted over here. So if you look at, this is the arrow here. Let me share with you guys. So this is a 5-day rolling performance. So why I do use a 5-day rolling performance, because it gives us a better shorter term trend rather than a 1-day performance. All right. So you look at this horizontal gray line here. So this is where the meeting, 3 a.m. Singapore time. All right. So there was an initial spike in the dollar, then on the dollar yen and some of the currency as well, before after the Fed chair press conference gets underway and the dollar continued plummet. All right, so what you could see over here is that even the strongest dollar pair, which is the dollar against the yen, also losing strength as well, right after the 3:30 a.m. Singapore mark. So net overall, the dollar is still going to trade on the weaker side of the story. And if you look at the US dollar index over here, right, I mentioned earlier on, prior to the FOMC meeting, the dollar index is still not showing any signs of a major / medium-term bullish recovery or bullish sequence, but however, it's showing more of a potential setback towards the lower limit of this complex sideways range configuration, multi-month one, that has been unfolding close to, I would say, 5 months or so since the low of 1st of July 2025 over here. You look at my screen, all right, at the 96.55 level. Right, previously at the end of November, hit the upper limit of the range at 100.54, showing signs of bearish candlestick reversal pattern before inching downwards before the FOMC meeting takes shape yesterday. And even prior to the meeting at the start of this week, it shaped a rebound, but the rebound can't break above the 50-day moving average, the 200-day moving average, and as well as the 20-day moving average. Bearish reaction yesterday, right exactly at our first intermediate resistance to watch will be 99.25, and right now it has broken below the support level at 98.66. and potentially en route towards the next support level at 98.03 over here. So net overall, what we could see is the US dollar continues to trade on the weaker side of the thing. But bear in mind that after this strong black Marubozu candlestick that has taken shape after the risk event yesterday, which is the outcome of the FOMC meeting, there could be some kind of a mild rebound on the intraday basis. So later I'll take you through what are the potential mild rebound level for the dollar to do that pushback up before another signs of weakness coming back. So that I will cover the second segment of the daily dose, which I touch on all the intraday technical outlook on the 4 major US dollar pair. So now the next key thing over here is, let me share with you guys the walkthrough of the US stock market first. Then thereafter, I'll jump straight into the details of the FOMC meeting. All right. So for the US stock market over here, all 4 of them close in the grid. All right, all 4 of them close in the grid. So the SPX is up 0.67%, the Nasdaq up 0.42%, the Dow Jones up 1%, and the Russell 2000 up 1.32%. So what we could see over here is that the markets has starts to spread out over here. That means usually when we see a positive risk on impact, the higher beta indices, which is comprising of the mega cap technology stocks like the Nasdaq 100, tends to outperform. But this time around, we start to see the laggards outperforming. So there is very clearly a rotation play that is going on in the marketplace right now that has taken shape in Q4 this year. In fact, most of our Q4, we start to see outperformance on the Dow Jones and the Russell 2000. Because bear in mind that especially the Russell 2000 hasn't really made fresh all-time high multi times this year. So yesterday, because of this ex-post FOMC meeting, that market view is as not so hawkish as feared, pushed the Russell 2000 to a fresh all-time high yesterday at up 1.32%. So if you look at the technical chart of the Russell 2000 over here, should be the chart. Yeah, it's a small cap. Right, this is the day. Let me put it in the day. All right, so the previous all-time high was on 27th of October this year. So there's a setback over here. Then thereafter, yesterday, it rammed it through and cleared above the previous all-time high that was previously printed in 27th October this year to see a fresh all-time high at 2559.60 or 2559, 2,559. Whereas the S&P 500 and the Nasdaq 100, yes, they closed positive, but hasn't hit the fresh all-time high yet, or hasn't broken above their earlier, late October fresh all-time high. Over here, this is the Nasdaq 100, and this is the S&P. All right. So very clearly, what I could see that is the laggard that is at play. Whereas the S&P here is almost hitting the fresh all-time high, but given the fact that the Nasdaq 100 still has some more room to go, there's much more room to go. Right, you can see on the chart here, there's this clear white space before hitting the fresh all-time high. So indicating that there's this rotation play where market participants are now embracing more non-mega cap tech related stocks, which is very obviously the Russell 2000 is outperforming yesterday. So net overall, it's still a positive rotation play, which is healthy for the US stock market going forward. Okay, so now the next key thing I'll share with you is more on the diving into some of the key aspects of yesterday's FOMC meeting. So let me share with you this Bloomberg news over here that summarized very great in greater detail. But before that, let me expand my screen so that you guys have a better view of the wordings here. So net overall, what you could see is that the Federal Reserve developed the third consecutive interest rate reduction of 25 basis points each, but maintain their outlook for just one cut in 2026. All right. So this is the dot plot. So previously in the previous dot plot, they're also looking for one interest rate cut. So this time around, they're also looking for just one interest rate cut over here. And going forward now over here is that during the press conference, Fed chair, all right, suggests that the Fed had now done enough to booster the economy against the threat of unemployment while leaving rates high enough to continue weighing on price pressures. So this particular statement here initially was quite hawkish, but throughout the press conference over here, he did mention that this further normalization of our policy stance should help to stabilize the labor market while allowing inflation to resume its downward trend towards 2%. That means, based on this particular remark, Fed chair has a view that inflation may no longer remain sticky going forward into 2026, and that could potentially inching down lower in 2026 towards the 2%. So bear in mind the core PC price index for September, the lagging one, still is as high as 2.9% that was released last week over here. So he believed that the effects of tariffs should have passed through. Okay, then after that, he was being pressed on, saying that if it were a foregone conclusion that the Fed next move would be a cut, Powell demurred, but added that he didn't see a rate hike as any official base case. So that is a very, very less hawkish remark, and market rejoiced on that in terms of bringing the stock price higher after he mentioned that. He's saying that the next move is unlikely to be a rate hike. All right. Okay. Then what we have over here. Yes, and this is the one. This is a very important one. So we know that QT has already ended in the last meeting. So they started to actually get away with quantitative tightening. And based on this meeting, and this being Fed officials has also authorized fresh purchases of short-term treasury securities, that means treasury bills, to maintain ample supply of bank reserve. So this is another form of indirect liquidity injection into the US financial system. So that could potentially, we call it, prevent any spike up in overnight short-term repo rates that could have a detrimental impact on the risk assets. So based on this authorization by the US Federal Reserve to authorize fresh purchases of short-term treasury securities, short-term treasury securities, that means treasury bills, that could potentially see an increase in supply of liquidity in the US financial system. And with this increase in supply of liquidity in the financial system, could potentially boost up risk on assets or risky assets like stocks, right? So that's actually explained why the US stock market rallied yesterday, despite that dot plot projection that only pencil in one interest rate cut for 2026. All right, over here, then more about that. Okay, so let me more talk about the dot plot over here. Right, so this is the dot plot over here. Yeah, this is the fresh forecast. Go down. Yes. So official upgraded their median outlook for growth in 2026 to 2.3% from 1.8% they projected in September. So that is considered as a Goldilocks scenario. That means, i.e., they don't view that the tariffs that has been implemented this year will have a potential negative impact on the broader US economy. And they upgraded their growth to 2.3% from 1.8% projected in September. And most importantly, they saw inflation declining to 2.4% next year. So right now, the core PC year on year is at 2.9%, down from previously 2.6 projected in September. All right. So net overall, what we could see is more like a Goldilocks economy. Number one, higher projected economic growth, lower inflationary trend, and that could net overall be positive for the stock market, given the fact that the US Federal Reserve injected or give the mandate to buy more short-term treasury bonds that could inject liquidity in the system, despite they only pencil in one interest rate cut for 2026. And also during the press conference, Fed Chair mentioned that the base case scenario for next interest rate meeting or subsequently the near future is not a rate hike. So market embrace it very positively in terms of the US stock market and send the US dollar lowered yesterday. So that's the crux of the impact of the FOMC meeting. All right. And despite the dot plot that's being shown in one interest rate cut for 2026, market participants are much more dovish over here. So let me share with you what is the latest reading based on the Fed Funds Futures traders price action behavior as compiled by the CME Fed Watch 2. So based on the CME Fed Watch 2 over here right now, so this will be the probability for next meeting. So that will be 28th of January next year. So currently, Fed Funds Futures traders are looking for a high chance that the Fed will be on hold in the next meeting in 28th of January. Around a 78% chance that the Fed will maintain it at the latest rate now at 3.5% to 3.75%. So if you look at the aggregator tab, where we're able to see the probability for the next interest rate cut going forward, and next interest rate setting meeting, that means the next FOMC meeting going forward into 2026, the market participants now are looking for a chance of either coming in March next year, 18th of March 2026, or 29th of April 2026 for the next fourth interest rate cut to come in. So the March one at 18 March 2026, the chance is not that high, it's only slightly above 50% at 57%, but the higher chance will be at the 85% probability, where market participants expect the cut to do another 25 basis point cut. That will be the fourth cut in all in this ongoing interest rate cut cycle that kickstarted in Q3 this year, to bring it down to 29, to bring it down to 3.25% to 3.5%. So that will be on the 29th of April 2026 meeting. Then thereafter, they're only looking at the fifth cut to potentially come in the 16th of September 2026 meeting at 92% chance. Then thereafter, the Fed will maintain. So if you look at the end of 2026, which is the last meeting, 9th of December 2026, around 80% chance, the Fed funds futures trader expecting the Fed rate to be at 3% to 3.25%. So that actually imply a minimum of 2 interest rate cut for 2026 at 25 basis points each, much more dovish than being penciled in by the dot plot, which only shows only 1 potential interest rate cut in 2026. All right, so because the continuation pricing of 2 interest rate cut by the Fed funds futures traders going much more dovish than what the US Federal Reserve median projection for 2026 rate cut, that also allows the US dollar to weaken yesterday as well. All right, so that will be the FOMC. So let me share with you now the performance of the Asia Pacific stock market. All right, so if you look at the Asia Pacific stock market, it's rather a mixed bag. The Nikkei is down negative 0.58% over here, now trading to the session low after unable to maintain the initial gap up. All right, over here, okay, it's trading at the session lower. So later I'll share you the Japan 225 CFD index, which is representing the Nikkei 225, is still stuck within a sideways range over here. And the Hang Seng is rather lackluster as well, which is the representative of the China stock market. So Hang Seng almost unchanged at 0.075%, and now trading close to the session low as well. And the Hang Seng Tech is faring the worst, down negative 0.5%. So the reason why the China/Hong Kong stock market is rather lackluster right now is due to this news flow. There's this report by this third party, I think the information over here, there's this particular media outlet called the information. So the information media outlet kind of alleged that DeepSeek is actually a leading AI company, almost on par with ChatGPT and Anthropic. Okay, so this Chinese artificial intelligence startup DeepSeek has relied on NVIDIA core chips that are actually banned in the country to develop an upcoming AI model. All right, so we know that NVIDIA Blackwell chip is the top tier chips that is not being allowed into the China market. Why? Because you know there is ongoing rivalry between China and US in the high-tech uranium space. And bear in mind that this news came after this week positive breakthrough, where the Trump administration, which is US President Trump himself, allowed NVIDIA lower tier H200 chips to be shipped to China. So with this alleged, we call it a report from the information stating that China DeepSeek is actually using banned NVIDIA chips, which is the higher tier Blackwell, that being smuggled into Chinese market to enable it to actually run its latest DeepSeek AI model, that could potentially see a withdrawal of the recent authorization by the Trump administration to allow NVIDIA chips to be shipped into China, which is the lower tier one, the H200. So that actually explains to us why the Hang Seng Tech Index is actually down by negative 0.4%, because there could be a repercussion potentially again into the China big tech related companies by US, we call it administration over here. So that also see the Hang Seng Tech down by negative 0.4%, given that the Hang Seng Tech has higher weightage in those China big tech companies like Alibaba and Baidu. So if you go down the other Asia market over here, even the mainland CSI 300 is also rather lackluster. The A shares over here down almost unchanged at negative 0.06%. And the rest of the other Asia is trading rather mixed as well. Kospi is down negative 0.6%. The TAIEX is down negative 0.8%. So if you look at over here, that it seems to us that AI tech-driven companies, highly weighted tech composite benchmark stock indices in the Asia Pacific is not faring that well after that alleged so-called NVIDIA Blackwell chip is being smuggled into China to allow leading Chinese AI start up this DeepSeek to run their latest model. So going to Southeast Asia is rather more positive. The STI is up 0.35% over here, and even the ASX 200 is up 0.2%. And what's interesting over here is that this NVIDIA alleged so-called smuggling of their higher tier Blackwell chip into China has also saw the E-mini futures trading down as well. So the Nasdaq 100 E-mini futures is actually coming down very steeply down, negative 1.4%, okay, negative 1.4%, erasing yesterday's ex-post FOMC gains. And also the E-mini for the S&P futures also dragging down as well at down negative 0.9%, given that the top three component stock on the S&P 500 is all centered on this potential AI-driven play, which is NVIDIA is the biggest weightage cap, followed by Microsoft and Apple. All right, so this is the current situation that is unfolding right now in the Asia Pacific session. As we are speaking now, it's 11:22 a.m. Singapore time, where we start to see the E-mini futures both on the Nasdaq 100 and the S&P 500 erasing yesterday's ex-post FOMC gains due to this potential negative news flow coming out from this called there's this report by the information stating that potentially NVIDIA higher tier chips Blackwell is being smuggled into China. All right, so that sum up the first segment of the daily dose. All right, so let me now immediately goes to the second segment, which is much more we call it important, which is all the intraday refresh levels on these broad-based cross-asset classes that we cover on a frequent basis. So with that, let me expand my screen first. All right, so let's just make sure that everything is good. All right, so let us start with the FX market. Okay, so FX market, let us start with the euro dollar. Okay, so the euro dollar rallied as expected. So at the start of this week, we do have a bullish bias over here. So they finally cleared above that stubborn intermediate near-term resistance at the 116.75 level that has been resisted since 4th of December, which was the previous Thursday. So market rallied to it, almost hitting our next resistance level at 117.20. So what you could see now is the RSI has been hit at overbought level, and in today's Asia session, as we're speaking right now, 11:23 a.m. Singapore time, it has just exited from the overbought level. So indicating that potentially in today's later part of the Asia session from now until early European session, there could be a minor pullback taking shape. So minor pullback support level to watch. Yeah, for sure, the first support level will be the bullish breakout of that 116.75 resistance level from the previous Thursday of 4th of December, now turns into an intermediate pullback at 116.75. Have a bit of a breathing space to see this very clear former minor swing high of Tuesday, 9th of December, and as well as Wednesday before the FOMC meeting. There was some resistance level break, now turns into a pullback support at 116.55 over here. And if you do the Fibo retracement of this recovery from the low of 9th of December at 160.15 all the way up to yesterday's intraday high, or today's Asia session intraday high at 117.07, that constitute close to the golden ratio at 61.8%, making this 116.55 as a more important near-term support level. So hence, I'll be using 116.55 as my short-term pivotal support level to maintain this ongoing bullish biasness after this minor pullback has taken shape. Two resistance level to watch for today: 117.20, above it sees 117.60 next, which is the 1.382 Fibo extension of this ongoing impulsive bullish upmove sequence after the formation of these two minor double bottom that has taken shape on 6th of November and 24th of November. And 117.20 graphically is also the minor swing high area of 6th of October and 17th of October. 117.60 1.1760 is the minor swing high area of 2nd of October and 3rd of October, converging closely with the 1.382 Fibo extension of that start of that double bottom new bullish impulsive upmove sequence for the euro dollar. Only a bearish breakdown below 116.55 that would invalidate today's intraday bullish bias to see a deeper minor corrective pullback to retest 116.15/115.90, which confluence with the 50-day and the 20-day moving average. That's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar finally has staged a breakout above the key 200-day moving average, which is our first resistance level that we highlighted yesterday, and actually clear past at 133.70 as well over here. All right, so right now it's attempting to actually come back down to retest this level here. All right, this is a pullback support level to look out for during the start of the European session today. All right, at 133, 1.3350, okay, 1.350. So I'll be using this 200-day moving average that has managed to clear up retest of it during the release of the FOMC outcome before rallying throughout Fed Chair press conference. So this level will be at 133.30, and so coming very close to the lower limit of this ongoing minor ascending channel support that I draw from the low of 21st of November. So using a slightly adjusted upward key short-term pivotal support level, maintain that bullish bias after this minor pullback potentially that could take shape, given that the RSI has started to exit down from the overbought level as we are speaking right now, which is 11:27 a.m. Singapore time. Right. So with that, I'll be using 133.30, tighten short-term pivotal support, maintain that bullish bias after the pullback has ended. Two key resistance to look out for in today's session: 134.15, 134.50 on the sterling dollar. Only a bearish breakdown below 133, 133.30 means 1.3330. That would invalidate the bullish bias view to trigger a much more deeper minor corrective pullback to see a retest at their 50-day and the 20-day moving average again, acting as the next near-term support level at 132.70, followed by 132.20. All right, so that's the sterling dollar. Up next will be the Asia Pacific currency. Let's start with the strongest, which is the Aussie dollar. So the Aussie dollar continues to see a very strong up move and hit our resistance level 60.60, 66.90 over here, which I mentioned it that as my chart of the day for the 2 sessions ago. So with this level that has been taken out at 16.60, which is very close to this second resistance level, almost hit. So yesterday it printed an intraday high, pardon me, at 0.6686 at 4 a.m. Singapore time. So that is after Fed Chair press conference, and in today's Asia session it dipped down. So this fall in the Aussie dollar. So remember that Aussie dollar is always being used as a risk off, risk on proxy. So given the risk off scenario driven by this geopolitical situation between US and China, which I explained earlier, where China DeepSeek being accused of using NVIDIA chips, Blackwell, we call it this illegal use of it. All right, that causes potential we call headwinds between the relationship with US and China. So that causes the Aussie dollar to slide as well. So with that, given the fact that the hourly RSI is now sliding but coming close to a key support level at around 33.3, where previously it managed to bounce off from this level, and how it exit from the overbought level, there is no bearish divergence over here. So given the fact that without any bearish divergence, potentially this minor pullback could be contained much easily. So with that, I will actually be using yesterday's US session low before the FOMC meeting at 66.30 as my slightly adjusted tightened pivotal support level to maintain this ongoing bullish biasness on the Aussie dollar. Above 66.90 potentially sees the next resistance coming in at 67.20, which is the 1.236 reward extension taken from this ongoing bullish impulsive up move from the low of 21st of November this year. And 67.20 also confluence with graphically the congestion area previously, which is way back over here, the minor swing high of 18th of November and 21st of November 2024. So that was about a year ago. All right, so back in time. Only a bearish breakdown below 66.30 will see a deeper minor corrective pullback and invalidate today's bullish bias view to seek out 66.05, 65.80/65.55 over here. So 65.80 is very important because it's the lower limit of this ongoing ascending channel, a minor one drawn from the low of 21st of November, and also 65.80/65.55. They're also coming very close to the rising 20-day moving average. So once the support level comes very close to here, 65.80/65.55, I'll be on the lookout for any form of a bullish reversal candlestick to turn my bias back to a bullish bias again, given that this ongoing bullish impulsive upmove sequence is still intact and they are still trading within this minor ascending channel and trading above the 20-day and the 50-day moving average. So that's for the Aussie dollar. Lastly will be the dollar yen. So the dollar yen pushed down as expected over here, and almost hit our the second support level at 155.35 after the breakdown of the 156 figure level, which is the 20-day moving average. So given that the hourly RSI is really at the overbought level over here, given the fact that there is no bullish divergence, all right, price action of the RSI showing a lower low at the oversold, in line with the raw price action of the dollar yen. So given that the RSI is oversold, and in today's Asia session right now, as we are speaking, 11:31 a.m., he has already exited from the oversold level. All right, so being exited from oversold level, there could be some form of a bounce back. So bounce back to test 56 level over here, maximum 56.60, which was the rejection, the pin bar that got rejected at the outcome of the FOMC meeting yesterday. And if you do that Fibo retracement taken up from the high of 9th of December, so that is this week high all the way down to Asia session low, that constitute with the 76.4 Fibo retracement as well. So yes, there could be a bounce. So this bounce, maximum bounce, I'll be looking at this Titan short-term pivotal resistance level. So I adjusted it downwards from 57.15 yesterday to 56.60. So 56.60. So 56.60. Titan short-term pivotal resistance on the dollar yen, maintain that bullish bias after this bounce may take shape. As long as this bounce didn't surpass 156.60, still maintain that bearish bias, potentially on the dollar yen. Below 155.35, potentially seek out the key intermediate support level at 154.40, where the dollar yen managed to survive on the 5th of December, and this is also constitute with the minor swing low of 17th of November as well. Only a bullish breakout above 156.60 will invalidate today's bearish bias view to see another choppy drift upwards to retest 157.15. Only a breakout above 157.15 will see a further squeeze up towards 158 figure level / 158.35. So that's for the dollar yen. All right. Next up will be the major stock indices over here, starting with the Hong Kong 33 over here. So the Hong Kong 33, it actually hit our first resistance level over here. It hit the first resistance level. It cleared two resistance level at 25, around this 25,650, and coming very close to 25,830 level. All right, over here. So given this negative ongoing negative news flow that's coming out from the Hong Kong 33 over here, so what I'm going to do over here is that I will be having a neutrality stance instead for today. All right. So this is the previous breakout. All right. So it's a very tight neutrality range. Okay, 25,400. Okay, neutral between 25,830, 25,400. So in order to eradicate the current intraday weakness, as we are speaking right now, 11:34 a.m. Singapore time, price action got to break out above 25,830. All right, then we could eradicate the current intraday short-term weakness on the Hong Kong 33 for the next resistance level to come in at 26,140, which is the 50-day moving average that has been acting as a resistance level since the rejection of it on 2nd of December. However, a price breakdown below 25,400 will see a retest on the critical 21st of November, minus swing low area 25,150. All right, so that's for the Hong Kong 33, flipping to a neutrality stance for today. Next up will be the Japan 225. So the Japan 225 also now pumpering and now testing our first pivotal support level. RSI is coming to the oversold region over here. So with that, we will still maintain that bullish bias, but it's still stuck within this sideways range on the Japan 225. Still using 50,150 / 49,960 as my short-term pivotal support level. Still maintain that bullish bias view, but within this sideways range over here. So first resistance level to watch on an intraday basis will be this level. Right. this former minor swing low that has taken shape in yesterday's Asia session at 50,380, a breakout above 50,380, potentially see a retest at the minor range top that has been in place since 4th of December, 50,985. However, if there's a bearish breakdown below 49,960, then potentially today's bullish bias will be in this sideways range configuration, will be invalidated to see a deeper minor corrective pullback towards this support zone here, which is the 50-day moving average. Okay, very close to the 50-day moving average, so it's a zone at 49,400 / 49,085. 49,400. Oops, sorry. Okay, 49,400 / 49,085. So which is also the 50-day moving average, the lower limit of this medium-term ascending channel, or the medium-term ascending channel drawn from the low of 7th of April 2025, and also confluence with the minor swing low area of 1st of December at 49,085 over here. All right, so very interesting, some form of bounce that's taking shape right now at the 49,960 short-term pivotal support. Right, so that's for the Japan 225 representing the Nikkei 225. Okay, next up will be the Germany 30. So the Germany 30 right now, so yesterday it hit our first resistance, come breakthrough at 24,190, and in today's Asia session there is a sell-off. Right, as we are speaking, based on the chart of our Germany 30 CFD index, representing the German DAX. All right, so with that, no change the levels. So the pivotal support, I can't tighten it to 24,000 level over here, which is my first intermediate support, and the 50-day moving average, given that there's no clear breakout above 24,190. That means there's no clear hourly close above it. So pivotal support still remains the same at 23,860 to maintain this ongoing bullish bias within this minor sideways range configuration that has been in place since 9th of December, which is this Tuesday over here. Unless we have a clear breakout above 24,190, then the odds will start to increase for this continuation of this bullish impulsive upward sequence that has taken shape on the low of 21st of November towards the next resistance level at 24,395. However, a bearish breakdown below 23,860 will invalidate today's bullish bias view to see a deeper corrective pullback to retest the 20-day moving average and very close to the intersection of the 200-day moving average at 23,670 next. Right, so that's for the Germany 30. Next up will be the Dow Jones Industrial Average. So the Dow Jones Industrial Average also faced this pullback over here. All right, so now it hit this level. All right, yesterday it managed to breach through the 48,000 level, but can't maintain that momentum, and now shaping this pullback itself. All right, over here. So with this highly volatile situation right now, so I would like to still maintain that pivotal support level at 47,560. All right, this level over here, 47,560. So the first support level to watch, which is coming very close to it right now, at 47,750. Okay, so this will be the first support level to watch in this ongoing intraday sell-off as we are speaking right now, 11:40 a.m. Singapore time. All right, so this intraday sell-off is more or less driven by that NVIDIA Blackwell chip that's being illegally smuggled into China. So potentially what we could see is that is this ongoing pullback. And as long as this pullback is surpassed below the pivotal support at 47,560, we'll still maintain that ongoing bullish biasness on the US Wall Street 30. First resistance level to watch out for will be the yesterday's minor swing high after the US press conference, as FOMC press conference has taken shape, which is at 48,113 or 48,110 to round it down to a whole number, 1,110. Right, so that will be my first resistance level to watch. A breakout above 48,110, potentially see a retest at the all-time high area, 48,450, okay, which was printed in 13th of November, and also the 0.618 Fibo extension taken from the ongoing impulsive upmove sequence from the low of 21st of November. Only a bearish breakdown below 47,560. A bearish breakdown below 47,560 will invalidate today's bullish bias view to see a deeper minor corrective pullback to retest the 220 retest the 20-day moving average, pardon me, confluencing at 47,180. There's also confluence with the minor ascending channel support drawn from the low of 21st of November. So that's for the US Wall Street 30. Next up will be the S&P 500. So S&P 500 came down, test the pivotal support level right now, very close to it. So no change. This will still be indeed my pivotal support, 6,807 remaining as per yesterday. So first resistance level to watch yesterday, it managed to hit, but didn't have a proper breakout above it after today's news flow. That was the alleged NVIDIA Blackwell chip being smuggled into China. Okay, so I will use yesterday's minor swing high, 6,890. Okay, 6,890, first resistance level to watch. Above 6,890, we'll see a retest at the current all-time high at 6,930, which was printed previously on the 30th of October. However, a bearish breakdown below 6,807 will negate the bullish bias view to see a deeper corrective pullback towards the intersection between the 20-day and the 50-day moving average, confluencing at 6,780, 6,760, which is also the pullback line of this former medium-term descending trend line previously drawn from the all-time high, where the bulls come breakthrough on 12th of November, and finally it did a breakout on the 1st of December, now turns into a pullback support at around this 6,780, 6,760 area as well. So that's for the S&P 500. Next up will be the Nasdaq 100. So Nasdaq 100 exactly tested the pivotal support that we have yesterday, and now seeing some signs of bounce taking shape as it starts to form a long tail hourly candle as we are speaking right now, which is 11:43 a.m. Singapore time. Right, so still using 25,455 as my short-term pivotal support level. First resistance level to watch out for will be yesterday's minor swing high area that can't clear above the 25,760, access at 25,830. So occurrence above 25,830 potentially seek out a next intermediate resistance to come in at 26,070 next, which is the minor swing high area of 3rd of November. Only a bearish breakdown below 25,455 and hourly close below it will see a deeper corrective pullback towards 25,305, 25,185. Can't maintain this level, potentially seek out the next support level at 24,920 next. So that's for the Nasdaq 100. All right, now very quickly, let us now go to the commodities market, starting with the gold XAU/USD. So gold XAU/USD, nothing that exciting, still going to track within this range bound configuration over here. So with that, it still continues to be range since the high of 1st of December at the start of this month. So it's still trading above the 20-day moving average and still trading above the 50-day moving average. So still maintain that bullish bias, but within a range bound configuration using the 20-day moving average as a short-term pivotal support level at 4,150. Intermediate support level to watch will be 4,190 that managed to survive after the outcome of the FOMC meeting. So first resistance level to watch will be the range top of the range resistance at 4,267. So only a breakout and an hourly close above 4,267 will increase the start of a bullish impulsive upmove sequence for gold again to retest the next resistance level at 4,340, slightly below 4,380 all-time high. So 4,340 is the congestion area here of 21st of October, and so coming very close to the one-time Fibo extension taken from the low of 28th of October this year. However, a bearish breakdown below 4,150 that will totally negate this ongoing bullish impulsive upmove sequence to see it drifting downwards again. So what we could see is that potentially retesting the 50-day moving average at 4,105 next. All right, over here, a breakdown below 4,105 will totally damage this ongoing minor uptrend phase to see a retest at 4,038, which is the minor swing low area of 20th of November to 24th of November. All right, so that's for gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil managed to dip down as expected, almost hit our support level 57.54/31 before rebounding at the start of the US session. And right now, it also got rejected at the 20-day moving average again. So you can see this inverted V shape. So with that, still no change. Our Titan pivotal resistance levels will be at 59.50. that we have yesterday. So 59.50 short-term pivotal resistance level, maintain that bearish bias for it to hit that minor range support level that has been in place since 21st of November at 57.54/57.31. Next, only a bullish breakout above 59.50 will see a squeeze up back towards the range top at 60.10/60.40. That has been acting as a resistance since 20th of November and got rejected at last Friday as well. So that's sum up all the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today as the European session gets underway? All right, so very quickly, the economic calendar. So today will be the Thursday over here, 11th of December. So do allow a bit of couple of seconds for the calendar to run. All right, over here, let's go up. All right, so at this point in time, the next important data in the European session over here will be a rather quiet session in the European session. So no key data to look out for. And also during the US session, we have a tier 2 data, which is the initial/weekly jobless claim data. So these are weekly data, tends to be much more erratic. So initial jobless claim and continuous jobless claim. So this data will be quite lagging. So it's for the week of 29th of November. The initial jobless claim will be the much more recent one, 6th of December over here. And we also have the release of an OPEC monthly report that is releasing timing-wise, it didn't have any timing. So that could potentially influence the West Texas crude oil prices as well. So as we head into the early Friday session from 12 a.m. onwards, no key data, no key US Federal Reserve officials speaking. And that potentially sum up a quiet data release day for the global markets, except for the US initial jobless claim and the weekly initial jobless claim and the weekly continuous jobless claim data that will be up at 9:30 p.m. Singapore time, which could potentially influence the global markets. So with that, I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.